Morning. So, optically there was nothing wrong with Reliance numbers, but we have the stock down about 2% today. What's your own call after the numbers? Uh, do you think the quality of earnings was as good as the market expected, or were there some issues if you looked at the overall earnings?
No, I don't believe there was anything wrong with the quality of earnings. I mean, stock prices don't always react one-to-one. And I think one of the reasons the stock has come off is that while the results were good and outperformed analyst forecasts by 6%, a lot of the traders' forecasts had become excessive. So I think a lot of positions had been built up prior to that also. So it's frankly to do with short-term, very short-term technicals versus fundamentals. If anything, even the quality of earnings, if other income is one gauge to go by, was even better. And even the key driver, which is gross refining margins, while there is some element of near cyclical upturn there, and that may give up perhaps in the next 3 months or so, but a lot of the gross refining margin increase is actually very structural and permanent. So I don't believe there was anything fundamentally wrong with the results, no.
Okay. Jal, on that basis then, what are your EPS estimates that you're working with and any change in your assumptions?
You're asking me very specific numbers. I mean, I don't remember the absolute EPS estimate, but yeah, we've hiked our near-term numbers. We've hiked, I think, March 2016 by 2 or 3%. And similarly March 2017. And we've hiked a target price as well by about 4%. We were among the highest on the street. We are now at 1270. In fact, we've hiked the numbers, yes.
Okay, we've hiked the numbers. Jal, what about Petchem performance in particular? That is something where they managed to surprise everyone on the upside.
Yes, the Petchem volumes have been extremely robust, and what happens as a result of robust volumes, you are in a better position to demand higher prices as well. So they did have a bit of a kicker for both of them. Now, Petchem is of course divided into sort of polymers and polyesters. Polymers demand growth was in the region of about 14%, polyesters lagged about 6%, so it's not universally good. But there's a very wide spectrum of products that they make. Essentially, polymer capacities globally are not coming up that quickly, and utilization rates globally should remain strong. Also, the other structural shift there is that with oil prices going down, the naphtha-based producers, their relative advantage increases. So the gas-based producers and the naphtha-based producers, gas input prices don't move very sharply, and when oil prices go up, gas gets advantage, and the reverse happens when oil declines. So Reliance, being predominantly a naphtha-based producer, also saw an increase in margins because of that as well. But going forward, more than margins, whether it's in refining or petrochemicals, especially petrochemicals, you're going to see a volume-based play. So we shouldn't be reading too much about the margin expansion in this quarter. It's really essentially a significant volume-based play going forward.
All right, Jal, thanks a lot for your time today and
Thank you.
Taking us through Reliance earnings. The market is back at the low point of the day, and that is what we spoke about. This is so reminiscent of what we had to last Thursday, when the market kept making lower intraday low, and you kept making money even if you shorted 20 or 30 point intraday recoveries. A large part of this market fall is because of what's happened to the currency. There's a fear factor now back in the currency.